Hey guys, welcome back to the channel. This is Future Trading with Mike, and today is August the 28th. It is Sunday morning, Eastern Time, my time. And before we get started in today's video, but a topic I want to talk about surrounding liquidity, I want to thank everyone, those who have currently subscribed to the channel. You guys know I do this in the beginning of each video. Thank you to all the subscribers who have hit that red button, that subscribe button, and joined the team here at Future Trading with Mike. Also, make sure to click on the little bell icon if you guys have not done so. It's right next to the subscribe button. That's going to ensure that you never miss one of the uploads here on the channel, because you guys know the content on this channel is valuable, and that's why you guys have been joining and subbing to the channel and joining the Discord. I appreciate you guys. You guys have found value in the content, and lots of you have sent me messages stating that, pretty much thanking me for supplying these videos, supplying the content, because they found it very helpful in their own trading. So if you haven't subscribed to the channel and you're a newcomer or a first-time watcher here on one of the videos here, especially today's video, please make sure to look down and click on that red button. And that red button says subscribe. Make sure to click on it, join the team here at Future Trading with Mike, and click on the little bell, because your subscription or subscribing to the channel does not count unless you click on that bell. Why? Because you'll miss the uploads. I want to make sure that you get the uploads. So click on subscribe and click on the bell so that you never miss one of the uploads here on the channel. Also, if you're interested in joining the Discord, we have a community. It's free of charge. Very helpful, very helpful. We have a team or a community of fellow like-minded traders that trade each and every morning. When the markets are open, we all come together collectively and share our ideas and thoughts about the markets. We converse about certain topics surrounding the future markets, as well as if you have a question, someone's always going to have an answer. So feel free to join, and all you have to do is find the link to the Discord down in the description portion of this video or any video below. Okay, so here's the Discord. We have, I think, a little bit over 250 members on the community now, and each day we talk about certain topics. We talk about tips and hints about areas where we're looking to trade from. So it's very helpful. Maybe you're lost, maybe you're a beginner trader, maybe you're trying to find your way. Join the Discord. I promise you. Well, I'm not gonna make promises, guys, but I'm sure you would find it would be a place to where you are, an environment or a home that you could actually come to here on the channel and join and receive some good content or good information, valuable information pertaining to markets, whatever the case is. And I'm sure it probably will help you along in your own trading. So join the Discord if you're interested in joining the Discord as well. If you're interested in joining one of the YouTube membership tiers, there's two tiers. You can simply click on the join button on the homepage of here on Future Trading with Mike, or on any video on the channel. Here on the channel, click on the join button. You'll see there's two membership tiers that you can join. One is the loyal supporter membership tier, and the other one is elite channel membership tier, which I believe everyone signed up for that one. All those who have signed up for it. Why? Because you get all the perks, and it's basically the price of a cup of coffee. And with that, especially with the elite channel membership or elite channel member tier, you get the exclusive video content, which is backdoor content that I do not post on the public side of the channel. For $6.99 a month, you get my trade breakdowns. I go into detail about my trades. I don't post it every single day, but I do post them, weekly or a few times weekly. And what you do receive is the actual trade breakdowns. So you get an inside thought, or you get the inside understanding of my thought process as I'm working my way through my trades, what I'm looking for, what I'm seeing, why I took the trade. I break it down, okay? So that way, maybe you are interested in trading kind of similar to the way I trade, which is supply and demand. Supply and demand. If you don't know much about it and you're a newcomer or beginner, or maybe you heard the term supply and demand, learn it. I promise you. Here I go again using the word promise. I'm not gonna say promise because I don't like to make promises. I can assure you that it's a highly effective way of trading. Okay, all right. I don't like to use the word promise. All right, so let's take a look and talk about today's topic. And today's topic is surrounding liquidity. Like I said, okay, we're going to talk about how to locate liquidity, what to look for, when it comes to the charts, and as well as identify some areas where you could actually use a strategy to trade what's called liquidity grabs. And liquidity grabs are basically where the market makers, in a sense, are looking to quickly move to a certain area where there could be like equal highs or equal lows, whatever the case is, where there's liquidity rested at. And it's a certain strategy that I particularly like to use if I see that type of setup happening, or I notice that, you know, smart money in the market, say for instance, is trying to basically bring price back quickly to an area where there is a, you know, equal lows or equal highs, and they basically take it out by just a little bit just to move the market back up. If, you know, if they force the market real quickly back down, stopping out traders right there at an area of liquidity and turn the market back around. And then the same thing, you know, if there's similar highs, whatever the case is, they rush up, they tap it, and then bring the market back down. So that's what's called liquidity grabs. You may have heard it. You know, it's out there. It is a solid way to trade. Now, it doesn't happen all the time, but when it does happen, typically you'll normally see it around the opening of the session, pretty much, because it's a quick move, you know, or right at the opening of the session. As soon as the market opens, you know, you'll see it. It'll happen real quick. So it is a very good way to actually quickly join in on a move and, you know, make a good profit. Okay, so we're going to jump into today's video and talk about, you know, those liquidity grabs and how to locate liquidity the way I see it, the way I understand, the way, you know, most people who are experienced professional traders trade it. So let's take a look. We'll go ahead and jump into that now. Okay, so let's look at some examples. This is just from the 26th of, I think that was Friday, okay, before the market started really dipping and selling off, okay. We see that the market was moving to the upside right here, right? On the move to the upside, making higher highs and higher lows. That's what that means, right? Okay. So, as the market is making these higher highs and higher lows, there's areas of liquidity that price leaves behind. So, when price pushed up here, okay, pull it back, liquidity is right here at the highs, okay? Liquidity can also be right here at the lows. So, as price makes its high here, pulls back, makes a higher low, makes a higher highs up here, there's liquidity sitting right up here, okay? Because we have these highs sitting right up here, right? And the high really is right here at 41.88, okay? So there's liquidity sitting right there, okay? As price moves away from it, all right, it pushes lower, it starts to make these lower lows and lower highs, okay? All right? So now there's liquidity sitting right here at this low, pretty much on this pullback, and then price moves away from it. So there's liquidity sitting here now, money in the market resting there, and there's money in the market resting here, okay? All right? So that's how you pretty much can spot areas of liquidity. It's areas where price is making, say, for instance, a new high, then it pulls back, and then it makes a low, okay? So you may have liquidity sitting at the top where there's a high at, and then liquidity sitting down there where there's a low at. Liquidity resting here, liquidity resting here. Then the market pulls back right here, okay? Now it makes a lower high here, all right? Now it's kind of moving sideways here. We are in a wedge, and we don't quite know which way the market is going to keep moving. Now, if we follow market structure, we're going to kind of have a bias that the market's going to kind of want to probably keep moving to the upside, all right? So then, what it does, it pulls back, okay? All right? Then it pushes higher. As it pushes higher, what does it do? It breaks through, all right? Money's being taken right here, okay, or collected. Liquidity right here, liquidity right here. They hit two areas of liquidity and take it out. Right here, this high here, right here, this high here, okay? Price moves through it, all right? As it moves higher, what does it do? It makes a new high. So at each area where there's a new high or a new low, you're going to find areas where there's liquidity, money resting in the market. And that's the way the market makers like to move, is they know people are going to have, say for instance, put their sell stops or sell orders right here, okay? Sell orders right here. So as the market pushes higher, all right, they're stopping traders out to collect that area or collect that money where there's liquidity resting in the market. They push the market higher, make a new high, okay? Then the market pulls back. So what's happening here? There's liquidity resting right here as well, okay? Market pushes up, pulls back, there's liquidity resting right here. So there's a high here. So on the pullback, price made a high here, okay, which is actually a higher low, a lower high. And then it pushes higher, takes out liquidity, takes out liquidity. So it just moves in the market to where pretty much institutions, the market makers, are looking to capitalize off of other traders' misfortunes, meaning that, you know, opportunities where people sold, you know, say like right here, market pushes down, okay, pretty much it's like more like a retracement. They know people are going to have sell orders resting up here, and then they go up there and stop them out and collect their money, okay? All right, so down here is liquidity right here in this area here, okay? Now, we have not so far come down here and tested these lows down here, and you know, where the market has capitalized on those areas where there's liquidity resting at, and eventually we do. You know, take some time, but it doesn't happen until the 26th, which was Friday. Okay. Now these areas I was talking about was the 25th, which was last Thursday, but I'm setting up kind of the picture, the platform there, so you can actually see areas of liquidity resting in the market. So like I said, liquidity is going to be those areas where you have, you know, price making new highs and price making new lows. Okay, so so like right here, liquidity pulls back, liquidity makes a lower high here, liquidity. All right, and price pushes up, taking out liquidity here, starts making new highs and new lows, meaning high, low, high, liquidity resting right here, liquidity resting right here. Market pushes higher, takes out liquidity right here, makes a new high, pulls away from that area, so now there's liquidity sitting right there because selling took place. All right, so now where are there areas where there's liquidity resting in the market? Right here, right down here. These are lows, okay? This is a high, so money's sitting right here, money's resting right here, and money's still resting right here. Why? Because the areas have not been taken out yet, okay? And eventually they will. Price starts moving down, okay? Pulls back, pushes lower. This is a low. There's liquidity resting right there. The market comes down. What does it do? It takes it out. Okay? It's a game. People are putting orders in right here to buy the market back, right? Traders do. They bring the market makers stop people out, collect their money. They pull the market back, push the market lower, okay? Now there's money resting down here now. So we've taken out this area, okay? Drives lower, money resting here, okay? It pulls back. There's still money resting right here. When it pulls back, it makes this lower high, pulls away from it. Now there's money resting right here. Okay, so it's just kind of the ebbs and flow of areas where the market is leaving money behind. So as it makes a new high, pulls away from it, money sitting there. Pushes lower, moves away from it, money sitting at the low. So eventually pulls away, money's resting right here. Now there's money resting right here too that hasn't been collected yet. As the market pushes lower, they grab the money sitting right here, okay? And the market continue pushing lower, taking out this area over here, and then money's collected right there, okay? So this is just a way to help you identify areas in the market where liquidity is resting at some point, and it will happen, the market is going to take those areas out because money is still resting there, okay? All right, it's just the way the market makers move, and you have to understand big money rested in the market. You know, you have to understand smart money as it's, you know, in places in the market where it's resting there, okay? It will get collected, all right? And they will stop traders out, okay? All right? So you have to think and trade like the market makers and know their moves. You have to know, you know, when price moves away from an area, what is happening. It is money sitting there that will be collected, and that's called liquidity, all right? So just like I said, you look for highs and the lows, highs and the lows, highs, and then, you know, this was the high right here, and then that's probably the high for, yeah, that was high for Friday. High right here, and then price just drops lower, taking the lows out, So what is that doing? It's taking out liquidity, okay? All right? So that's how you can quickly identify, a quick way to identify liquidity and where the areas where it's resting at in the market. It could be similar highs, it could be similar lows, it could be a single high, it could be a single low. Either way, as price pulls away from those areas, there is going to be money resting in the market there. And at some point, the market is going to flush and push to a low or push up and thrust through an area where there's highs at and break that area to collect money, okay? Now, let's talk about something else, what they call, you know, if you look it up, it's called liquidity grabs. This is a strategy, a trading strategy. What I'm going to do is I'm going to talk to you about liquidity grabs, and then we're going to talk about a quick way, a trading way or strategy that you can use to actually capitalize on moves like this. Now, like I said, you're not going to see it. Most times where you're going to see it happen is at the beginning of the session or right as soon as the market opens up. Maybe within that first half an hour to hour window, whatever the case is. You may find a move like this. And if you can get in on a move like this, then you could be one and done. It could be one trade and you're done for the rest of the day. All right. So let me show you. Well, first of all, let's talk about liquidity grabs. Liquidity grabs are areas in the market where there are, the way I like to trade, the way I like to see it is I typically do not like to trade off of a single high or single low, okay? Areas where there is liquidity sitting there. I like to see price maybe test a low a few times, at least twice, okay? You know, 3 times at most, okay? Whether it's a high or low, either making a similar highs or similar lows, all right? Because each time price comes back to that low, like it pushes up, pulls back, hits that same area low again, pushes up, comes back to that low again. What do you think is going on right there, okay? And then they move away from it. Liquidity is stacking up at those lows. Same thing if it was doing it from the highs. It pushes down, pulls back to that high. Pushes down, pulls back to that high. Liquidity is stacking up there. So it's just more money resting there. It's like a pot of gold, you know, a pot of gold at the end of the rainbow, if you want to think it like that. And at some point, they know traders are either going to put their are going to put sell orders in where that liquidity is resting at the top because it's hit those highs a few times, or it comes down, say for instance, and you got some lows where prices tested those lows a few times without breaking through it at the moment. So money is sitting there. That pot of gold is sitting there. They're going to push through it real quick and break the market back higher. You know, in a sense, if they're trying to push the market higher, especially if the market's making higher highs and higher lows, you know, that's just the aim. You know, it's come down there, stop traders out. They know traders are going to have their buy positions right there at the bottom end of that low because of if traders are following market structure, what's going on, making higher highs and higher lows, they're going to want to keep pushing the market higher. So they come down there, they stop you out. You know, by breaking through that area of support where that liquidity is resting at, and then they turn the market back around. And this is what frustrates traders the most, because they are trying to get in on a trade going back up, and then the market makers come down there, they stop you out. The smart money in the market comes down there and stops you out, and then boom, what happens? They push the market back in the same direction, okay? All right, so let's talk about this, and I'll show you a couple examples of kind of like liquidity grabs and what you can actually look for, because it is a smart way to trade. When I do see those setups, I will try to take them. They do not happen every single day, but and my mind is so focused on supply and demand setups that, you know, most times I may miss that opportunity. And a lot of times I don't trade right at the beginning of the market, so I probably am going to miss that opportunity because they happen real quick. But if you can capitalize on them, like I say, guys, the liquidity grabs where, you know, they're rushing the market through a certain area of support or resistance real quick just to turn the market back around, you will capitalize and you can be one and done, okay? Okay, so here's kind of an example I want to show you of kind of how liquidity grabs kind of work. And here's an example where you'll probably see it, you know, happen like right at the beginning or close to the beginning of the, you know, the opening session, okay? And that's 9:30 Eastern time for me. It could be 8:30 for Central, or wherever you're at across the world. It's at the opening typically of a session within maybe the first hour, okay? So what you look for is, like for instance right here, okay? Price pushed up here, right? Okay, it took out structure over here, but then it turns and starts making lower lows and lower highs, right? All right, so as price was pushing lower here, all right, you have liquidity resting up here, right? Of course, all right, because the high right here, okay, but also have a lower here, so the liquidity resting right here. So price pushes up here. Now we have liquidity resting up here because price took out liquidity right here. But when price started making these lower lows and lower highs, pulling back, the way I kind of like to see, you know, look for kind of a trading opportunity to trade liquidity. It's like when price made this low right here. What did it do? It pushed up, it pulled back. So you have a low here already. It pushed up, pulled back, retested this low. So now we have an area where there's liquidity resting right here, liquidity resting right here. So basically we have, what I'm trying to say is we have a low here, low here. Price pushes higher, making smaller, higher highs, and pushes up, making smaller, higher highs and higher lows. Come up here, makes this high up here. Okay, so what did it do when it pushed back up here? All right, so if you pay close attention and you see what price was making these lower lows and lower highs to the downside, right? Basically, all price did was made a low here, pull back, made lows, pull back, testing a high here. So basically what it did was it was on a pullback, testing this prior high right here. Okay, so this is what's more so what's called like a similar high. Okay, all right, on a pullback. Okay, even though they're lower high, they are lower highs, they're still considered highs when it comes to looking at market structure and looking at moves that price is making to the downside. Low here, pulls back, lower high, moves lower, retraces back a little deep, okay, makes a similar high right here, all right? Now what we want to pay attention to, because I'm going to explain to you how this works, okay? As price was making the move to the downside, turns around, starts making these small little moves or retracement back to the upside. I mean, making these little higher highs and higher lows. It makes a low, pushes up, pulls back, retests the low. So we have what I would classify as a little similar low right there. Pushes higher, makes a high, pulls back. Okay, we come back up here. We're testing this low. This high right here, which is more so a lower highs, but it's still considered a high, like I said. Okay, now here's the opportunity. What time do we have here? Price. This is shortly after the market opens up. It pushes down. What is it doing? The thing you want to look for to see if price is going to push right down, wick or take out the area of liquidity right here, this low right here, okay? Wick right below it without fully closing below, meaning I have to see a solid red candle close to the downside, taking this whole area or this low out right here, which it did not. The market pulled back. As it pushed up, it pulled back, okay? What did it do? These candles, this candle right here, wick right below the lows right here, the low right here, okay? Taking out liquidity, stopping traders out, flips, turns back around green, you go long. You can take a long entry, okay? At least I'm going long, okay? I'm not going to tell you what to do, but me, I'm going long, okay? Market pushes up. Like I said, liquidity is going to rest at where a price makes a new low or a new high or similar lows and similar highs. There was a low created here. Price pushed up, pulled back, tested the low again, okay? So to me, that's a similar low. Pushes up. So that's kind of two lows right there. Like I said, equal highs, equal lows. So a low, pull back, equal low, pretty much in a sense, because it comes back down, tests the low right here, pushes up. As it retraces back, okay, as it pulls back, it does not close with the red candle taking out this low right here. As it pulls back down, price wicks out right here. They take out this area of support right here, hitting or breaking through liquidity, stopping traders out. Now, here's the catch. You may ask, well, what do I take the trade back up to? You take the trade back up to at least the prior high, which is right here. So you get in, say for instance, you get in like at say 35, right? Take the trade all the way back up here to say 44. And another thing too is I traded using the volume profile as well. What do you see here to the right hand? Well, let's go over here because we haven't even. What do you see happen? I'll blow this up a little bit. What do you see as far as volume profile when we get in this area right here? Where's price at? It's below the volume profile. And I'll always say I like to take my trades when price is at the outer edge of a volume area back to the median at least, right? Okay, because price likes to move from a lower volume area back to a high volume area. And when I'm going long, I'm looking for opportunities to take my trade below the high volume area, okay? Not right there at it. So, to me, that's more confluence, okay? Made a low, liquidity here. Price pushes up, pulls back, okay? What happens? It takes out slightly by wicking below this low here, breaking through liquidity, stopping traders out, flips 35 at 41.35, green candle. I'm going long, back up to the highs. But here's the thing. Why? Because there's liquidity resting right here. When price pushed up here, it made a high. It moved away from it. What did it do? It left money in the market, okay? It left money in the market right here as well, okay? So here and here, these are similar highs. And what do you have there? Liquidity. So you can look for price when you get into a trade here to take it back up to the prior high and test also the next area where there's possible liquidity resting at, which is right here, okay? Because these are similar highs. Price most times is going to come up here, take out this area where there's liquidity at this high right here, and break through this next area of liquidity as well, okay? Because there's money resting there. Follow the market. What does it do? It goes up, takes out liquidity here, this high here, breaks through this area of liquidity right here as well. And there's liquidity on each time it moves down here, and it keeps going up. Goes up, all right? Doesn't take this area of liquidity here, all right? Here out yet, where there's highs at. Pulls back, breaks through, collects money right here as well, stopping traders out. Okay? So that's a liquidity graph. It's areas where price is, and what I like to see is, for more confirmation, are areas where there's equal highs and equal lows, because what they like I said before is money or stacking up in the market, and they're going to want to collect that money. Okay? As price pushed up here, made a low right here, liquidity rested, Market moved away, pulls back, tests this area right here, similar low. Okay, that means there's more confirmation, more money resting there. Price breaks through the low right here, taking out all that money right here. Okay, taking that money out, or I should say, collecting that money, stopping traders out to push the market higher, and then price likes to move. Say for instance, from in a case where there's liquidity grabs like this, the market's probably going to want to push up and test or break through areas of the next area of liquidity, which is right here, this high here, and right here, this high here. Okay, so let's see if we can classify another area where maybe a liquidity grab at. Like I said, it doesn't happen all the time. Okay, but this was an area. It's set up around 9 o'clock, a low. Okay, liquidity here, market moves away. Boom, market's open here. Quick flush to the downside. Okay, you get the stop out of traders right here. A candle wicks out, price breaks higher. You know, liquidity is grabbed here, breaks higher, take out the next area of liquidity. All right. So here's another example right here I'm going to show you guys. All right. Pay close attention, okay? All right. Price is making higher highs and higher lows right here, okay? All right. So we have liquidity resting right here. Price pulls back, okay? Liquidity resting right here. Price pushes up because they have a high here and a low here. Liquidity resting in both areas, all right? So as price pushes higher, it takes out liquidity right here. There's money resting here now, okay? Pushes up. Now the market is already open, okay? All right, but here's a setup that does happen. It happens a little bit outside of that normal area or time range I talked about from 9:30 to 10:30, say for instance. All right, price pulls back. All right, so now we've got liquidity resting up here. There's a high here. The price sets up for these small little similar lows right here at the bottom, okay? Let me show you. Makes a low here, liquidity resting here, pushes up, pulls back, similar low, pushes up, pulls back. It's like making these little, lows back to back, low, 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 okay? So we got 3 similar lows almost back to back, right? In a sense, okay? As prices like kind of range and moving sideways right here. Pushes up, okay? All right? There's liquidity resting right here already where it made this lower high here on the move to the downside. Okay, but when price pulled back right here, retrace a little bit deeper right here. All it did was pull back up here to make a similar high. Okay, even though these are going to be like similar lower highs in a sense. So it made this low, liquidity resting here, pulls away from liquidity, pushes up, retraces back, makes this similar high right here. Liquidity resting right here. Price moves away, there's liquidity resting here, liquidity resting right here. Okay, this is where we find the liquidity grab setup actually happened. An opportunity to trade it. Price pushes down. We're looking at these lows right here. Okay? Pushed up, pull back. Pushed up, pull back. Making these little small, similar or kind of equivalent lows here. Okay? When price pulls back right here, what do you see price do? It wicks out right below, maybe a tick or two below these lows right here, collecting liquidity. Where there's liquidity resting at, stopping traders out. The market flips up, and what do you know? I'm long, okay? I'm long. Now the market doesn't immediately just push straight up, okay? It doesn't immediately push straight up. But what it does do is I'm looking for it's tap liquidity. It hasn't broken through and made a new low. It just pushed through, wicked out a little bit, okay? Flip, turn green. I'm looking for the next opportunity above, which is going to at least be my prior high where there's liquidity resting at. And possibly the next level or area where liquidity is resting at, because price, as it pulled back here, it made a similar high in comparison to this one right here. So liquidity is resting right here, liquidity is resting right here. When price tapped this area of liquidity here, turn back around, I'm looking to take price back up to the prior high and the area where there's similar or a similar high where there's liquidity resting at, and price to take out both areas. It does. It pushes up and continues pushing higher, even though we got a little pullback here, pushes up, breaks through this area of liquidity, breaks through this area of liquidity. So you get in right here, say for instance at 69. If you got in at 69 and you took it up here, okay, again, where is this at? We're at the outer edge of a high volume area. Again, okay, more confluence. You get in, price comes up, takes out this high here where liquidity resting at, and this high over here. And it eventually goes up here, and now it takes out this high where this liquidity resting at as well. So when price tapped, right here, took out liquidity, back down here, these lows, it took out another level of liquidity here, another level of liquidity here, and this high right here, okay? So you talk about a move if you got into this trade from 69 and took it all the way back up to, say, the high right here, okay? This high right here, all right, that could be at 84. So that's a great, I mean, that's That's a stellar move right there. If you can weather the storm when it's pullback here. Yes, this may got a little tricky when it pulled back right here. As long as the candle does not close below this area right here, this is where you're going to put your stop, below, not right there on it. I keep telling you guys, do not put your stop like right there. You know what? I'm not going to tell you not. You do what you want to do according to how you trade in your own risk management, okay? But if you carry such a tight stop loss, a tick or two right there at the stop, right there at a supporting swing, you're probably going to get stopped out, because the market makers know they know where your stops, or people are placing their stops at, and they're going to test those areas. One, because it's a low, liquidity is resting right here. Two, they know that people are probably going to have they want the opportunity to be able to put on a buy position in this area here, because as price broke up here, what did it do? It broke structure here, pulled back. It's an opportunity to probably go long here. They know people are going to put a buy into right here, and there's liquidity resting right here. They're going to flush that area out and stop traders out to collect their money, and then keep moving the market in your intended direction. So, I showed two great examples. Just wanted to cover that information with you guys pertaining, how to locate liquidity, as well as, how to trade liquidity grabs. So hopefully you find the information valuable. Guys, if you found the content valuable and you liking the content here on the channel, as you're watching the videos, please drop a like on the video, okay? I mean, if you want me to continue to make video content like this and it is helping you out, just do me a favor. Simply hit the like button for me. I appreciate it, and everyone else in the community appreciate it as well. Thank you for watching the video today, especially if you're a newcomer, and maybe this video really inspired you to hit that subscribe button. Hopefully it does, because there are lots of videos here on the channel that are packed with good information just like this. So if you don't mind, go ahead and click on that subscribe button, and make sure to click on the little bell icon so that you never miss one of the uploads, and drop a like on the videos as well. I'll see you guys in the next video. Take care and have a great rest of your Sunday.